Yeah, I'm losing my
But Pete,
edge.
this is too big of a short-lived trend for me to pass up here because I did some number crunching about an hour and a half ago, around 11 a.m. here, Central Time, and it was just too big. Like I was going through the components of the small stocks 75, and the two biggest movers out of all 75 stocks there were Tesla and Apple. Tesla up over 8%. Apple now up over 4%. And I'm doing, and I would go to Google and everywhere else, and I'm trying to find any reason for this aside from the stock split, because these stocks have seemingly been rallying because of the stock split that finally hit this morning for the last 2 or 3 weeks. I couldn't find anything aside from the stock split, so I wanted to look at the effect of stock splits on stocks and then also on equity indices that us futures traders trade very often, and see if we can find a trade for ourselves.
Right. Absolutely. Let's take a look in. I don't know. Do you call this a challenging environment? A little bit. I do, with some of these knucklehead mechanics or these outliers playing this parabolic role that is almost lulling us into some sense of normalcy around this. So,
but honestly, once you get, I hope that we are right now hitting that lulled sense of normalcy, like you're talking about, because that's usually when things turn a little bit, is when people start to think, oh, Tesla can't go down, or Apple stock they split, so it needs to have another 4 or 5% put on top of it. And these are two charts here, and unfortunately, Tesla, the incredible run that it's on, makes Apple's rise this year look like chopped liver. But Apple's up over 50% this year. Tesla's up over 400% here in the first half of 2020. And it doesn't look like much, Pete, but tacking on an extra almost 10% today in Tesla and an extra 4 or 5% in Apple this morning, if it is truly because of this stock split and the fact that there is now easier access for non-institutional people to grab this stock. I mean, Pete, I would understand if it was half a percentage point, right? But this is literally millions and millions of dollars. Actually, no, sorry, billions of dollars in market capitalization, the worth of a company, because it's been split. And so that's why I said, you know what? I'm going to buy into the trend. Let's do what all the other talking heads are doing and talk about this stock split, because now when it gets to 4% or 10% in Tesla, I think there's a little bit of an opportunity there.
Absolutely. I agree with you. The thing that gives me pause is you look at these moves, and anywhere along there, we could have called that outsized. Maybe the fact but when it's, I think the good news is that we've accepted that markets aren't efficient or logical, and we've been patient. So I think the one solid takeaway here is if you had tried up 100% in Tesla, up 200%, 300% would have been tough to cover because you would have covered it very quickly. But it would have been wrong. One of those wrong, and that's probably the hardest part of mechanics, is put something on and take it off. Put something on at an extreme and take it off 15 minutes later because you've got a poor choice. But any of these, if managed, if you're going to trade directionally, were interesting levels. They weren't right. They weren't correct in terms of what you were trying to accomplish, but they were interesting levels. And
today we're going to do a couple of things that, if I were to get on here and say the stock split, it's crazy, it's caused Tesla to be up 10%, let's just everybody sell it. That's not the game I'm trying to play. There's a couple of things that we can do here to fix this situation. Because Pete, you are a very beautiful and fit man, but you are a little up there in age, and I don't want to give you a heart attack selling Tesla up 400% and then it climbs to up 500%. And then we have to take you to the hospital. So I want to show these moves, and then we're going to zero in on.
Always thinking of others. Listen to you.
We're going to zero in on Apple here, and then also we have to go a couple extra steps, because once again, you'll see the game isn't merely, I'm going to blindly sell Apple because the stock split is crazy. Because they could invent the next variation of the iPhone, and it's going to, I don't know, cure
I saw
COVID.
the classic one today is Apple's building an electric car.
Oh, geez.
No,
Well,
I
so then
think,
Tesla, they go higher too with the electric car,
well, because they're
the
going to have to
increased
build,
competition?
because you're going to have to build a better electronic car.
Oh, because
I
they're
have no
electric.
idea
So they both
what
just
story
continue.
shoehorns into that.
I'm gonna start Amazon,
Yeah,
and
right.
then my company and Amazon will just continue higher. But I wanted to go through this because I think this is pretty cool here. And actually, these numbers, although I put them together less than an hour ago, are already dated because now Apple's up 4.5%, and Tesla is up a little bit, I think closer to 10%. But this is what's interesting to me because you've got a weighting here of 13% of Apple in Nasdaq. And I didn't really notice this, Pete, but the climb in Tesla and the climb in its market capitalization has gotten it to the top 10 in
Right.
NASDAQ now at 3.5% weighting. That's pretty up there. And then you factor in today's moves, you get to about an effect of positive 0.8%. And now, if I were to crunch these numbers more recently, the net effect on NASDAQ would be closer to 1 full percentage point. Pete, that doesn't seem like a lot to maybe the newer trader to futures or someone who's not used to indexes compared to single names, but two stocks moving the Nasdaq 100 a full percentage point
Yeah.
because of supposedly a stock split is freaking insane. And you look at the Dow and you look at the Russell and even the S&P 500 struggling to be positive on today because the majority of stocks, Pete, in the stock market, the majority of them are red today.
Right.
They are down. And so you're telling me now that these two stocks and their split over the weekend is carrying this NASDAQ to all-time new highs and to a differential of a percentage point to even close to 2 percentage point on some of these other major indexes. It's wild, isn't it?
It is. It absolutely is to think about. It's the nature of when you see the movements you saw on the previous slide, it's not fair to say distortion, but the reaction, you look at a NASDAQ chart in a vacuum and it's like, this is nuts. We're 125 points off of the lows 2 hours ago. And when you start to then understand, and what I really love about this is construction, all it is representative of what's going on in the underlyings. Sure. It's a few underlyings, which is problematic for a index who's part of the reasons we trade indexes are to afford us remove some of the single name sure. randomness that can play into an index. So here's a case where we're being NASDAQ isn't expensive. It's representative. Now, whether or not all of these 4 or 5 stocks, which are 40%, are accurate, I don't know. But I think we can make a strong case that they're all at unusual amounts of movement. But I think when we look at those returns and then look at the effects on the index itself, it really is. It's something we haven't seen.
It's I guess it is truly, you phrased it the best there. It's historically unseen. Like I can't think of anything. And I went back historically to look at some of these stock splits in Apple. And I want to focus now on Apple. And I want to also bring this into what I think is the closest that we can get to trading the other side of this stock split effect here. So Apple, it's a bigger weighting of the NASDAQ. I would say it's kind of easier for people to grapple with. And I would much rather trade that yellow line than that blue-green line for something that is, when you're talking about 8% of a 450% move, I feel much worse about trading that than 5% of a 60% move here. And that's just to say that Tesla, I don't know, that Elon dude can come out and say anything tomorrow and it could mess up your positions instantly. Whereas Apple, it's been around longer. It's a lot more diversified. Not nearly as much crazy commentary around it. So let's zero in on Apple here. And looking at NASDAQ again, you can see that it's very, very close correlation here. And this move here, just this move, is accounting for this up move here on that yellow line in NASDAQ. And once again, it doesn't look like much, but keep in mind, this is one of 100 stocks in this NASDAQ. And we already, if you look through any stock watch list here, I would contend that probably 60 to 75% of those stocks are red on the day. So Apple really carrying this NASDAQ higher. And now let's look at trading this this differing effect from the stock split. Because you go over to STIX, which is a technology index here from the small exchange that's been trading for 5.5 days now. Very tight bid-ask spread and a smaller product in there that we could trade micro Nasdaq or Apple shares against, which we're going to get to in a second. And STIX has Apple exposure, Pete, but it gives it that 1/60th relative to the other 59 technology stocks that are in the index. And so today's effect is only 0.1%, not even rounded up a little bit, relative to what is now 0.5 or 0.6% effect on the Nasdaq. So what I want to do at the end of the day, Pete, is I want to trade this big Apple stock split effect. And like we talked about, I can't just sell it, right? Because if I sell it and then technology as a whole moves higher tomorrow and the next day, then I'm just short a technology stock that's continuing higher. But what I can,
right.
Sorry, go ahead.
I think you make a great point is, this index can move higher for a number of reasons. It's just not these underlyings, but
Sure.
honestly, it's these underlyings, these big 4 or 5, as we count them, holding still and everything else moving proportionally and fueling that number higher. So don't, as much as we want to say you're trading these 4 underlyings, well, they do comprise 40% of the index,
Sure.
but at the same time, if they pause, it doesn't mean you're getting paid on your
Exactly.
Nasdaq trade.
Exactly. And so whether you're trading Apple shares or a Nasdaq, you're going to have to lay off the risk against something else. And so in theory, what I'd love to do is I'd love to sell Apple stock and then buy a bunch of highly correlated technology stocks against it, because you're looking for, and this red line here is a scribbling that I did on top of this, but just meant to personify other technology stocks that have moved with Apple, high correlation across those technology stocks there. But today, what you're seeing is tech stocks kind of flat, stocks in general flat on the day, and Apple moving 4 or 5% higher. And so simply selling Apple shares, Pete, could result in losses, even with the reversion of this red line to the white line. Because what you could see is that Apple white line either hanging in there or moving slightly higher as tech stocks do what they've done for the last 5 years, maybe move higher the rest of the week. So what I need to do, Pete, is I need to put 2 sides of this trade on. And thankfully, we have a technology index that will give you a small amount of Apple exposure, but then even exposure across 59 other tech stocks. STIX has a 0.97, this is as of today, a 0.97 correlation with NASDAQ if you wanted to look at short MNQ and then long 4 STIX products. And that would mean your MNQ position there, Pete, is almost 15% Apple. And then your small technology index position is only 1 or 2% Apple. So that gets washed out. And then you end up being long a bunch of technology stocks against short Apple mostly. Or you could go straight to the shares here on a 40-to-1 basis. This is after the split. Now that Apple is about $130, 40 shares or 40 deltas, if you're looking at options in Apple, would equate to 1 STIX contract. And this is what we're talking about here, is just a basket of highly correlated tech stocks against this Apple stock split effect that I think is just a little bit ridiculous today.